In today's video we will hear the old man Mike with some thoughts on Bitcoin and the stock market on Thanksgiving week with David Scarrica. I've followed him several times and even got some interesting things from him. I hope that for you too will be helpful. You can find his blog and site on the description below. At first you will receive an email with instructions and free guidance from him. Find the links below more 100% absolutely best guaranteed proven powerful quality products so you can have quick results with step-by-step simple solution. I wish you all the best to you and your family and a prosperous financial year in 2018. If you liked the video or you think that it's useful for you or others, please get involved with a share, like and comment. Thanks.
The stock market has gone up this year. Last year, gold stocks went up over 100% from their lows. They totally ignored that. And the GDX finished up 50% for the year. And this year, of course, Bitcoin has exploded and gone up multiples of all these fad stocks. And they never talk about Bitcoin. And we're getting lots of questions about Bitcoin over the past recently. So I'm curious, what are your thoughts on it?
Well, I'm actually going to start a Bitcoin trading service, but I'm more of the still pessimist or whatever you want to say realist is, it's gone up way higher than I ever thought. What's funny is that in 2013, 2014, after Bitcoin had kind of this big spike and then consolidation, I actually was bullish on Bitcoin. Now, unluckily, I didn't buy any myself, but because my feeling was it would be kind of an alternative currency like gold, when there would be a bear market in stocks and governments would print money. But Bitcoin now, I think, is more of a reflection of the stock market bubble, where, all this money that's flown into equity markets all over the world has also, gone into cryptocurrencies. And the analogy I use is, Mike and I'm 40. I think, Mike, you're 42, 43. I don't want to give away your age, but, the analogy I use is that when we were in our early 20s, it was the dot-com bubble. In 99, I was 22, and Generation X, which is our generation, they were the ones trading all these dot-com stocks and day trading and all this sort of thing because you can make quick. It was like hyper volatility, and that's what these cryptocurrencies have become for millennials. So it's the same thing where back then you had IPOs and internet stocks. Now you have ICOs in cryptocurrencies, and I think there's a lot of similarities to that. And the way I find this is interesting is, number one, you're going to have a few do well. There is some kind of net worth in the blockchain technology. I was just showing you, we'll show this in a second, this gold-based kind of.
I'll load up right now.
It's called glint.com, or Glint is the name of it. A friend of mine just showed it to me. It's out of the UK. And it's a thing that's kind of linked to the price of gold. And you can send money and use it as an ATM card and all this sort of thing. And look, I live offshore, so I have to use wiring all the time. But wiring now is so antiquated. It takes 3-4 business days for stuff to get places. You keep wondering yourself why are banks still using this? Now, just so you know, banks are now working on setting up their own blockchain technology. Because if I send you something like $1,000 from this Glint, right? And $1,000 would be like, I don't know, say it's to the price of gold. So if that, let's just say make it easier. Let's say I sent you $1,300. So essentially 1 ounce of gold. Okay. Well, that would get there almost instantaneously or take an hour or two. So why do I have to go to the bank and send you a wire and it takes 3 or 4 days? So I do think that's what the cryptocurrencies have done. They are going to change the way that we do business, the way we send money. But the analogy I again use back to the dot-com bubble is Amazon did that in shopping. But it really took Amazon 10 or 15 years to take off to where it is today after the late 90s. So I do think that we will use this. But like you look at some of my dad's age, the people who still have most of the money are the baby boomers. They're not going to be using cryptocurrencies. If you think they are, you're delusional. So when the millennials come into their peak earning years, in their 40s and 50s, yeah, that's 15 years from now. And that's probably when we'll see the second kind of wave in this kind of blockchain technology. But I do think there's money to be made. You could buy some of the new ICOs. you could, if you're patient, you can wait to buy Bitcoin after a big bear market. And also, they're going to start options trading on Bitcoin in December. And to me, I've been doing straddles recently where you're betting like a stock is either going to go up a lot or down a lot. Bitcoin to me is the ultimate straddle trade because it will go to 20,000 or go to 2,000. So that is, and you're going to make either money either way if you have puts or calls, right?
Well, I got two kind of thoughts about it. First, the fundamentals of Bitcoin, which you described, the blockchain, and you spoke a little bit about financial transactions, and you live offshore where that's a really big deal for you. But I've experienced over the years a couple problems myself doing or difficulties in doing transactions overseas. Last year, I did a wire to get into a private placement with a Canadian mining company. And for whatever reason, that wire got frozen in an intermediary bank for like 2 weeks when it was supposed to take 24 hours. It was really frustrating. And then about 10 years ago, one of the trips I took to the Bahamas, my credit cards got frozen when I came back home. And I was flagged as a national security risk for traveling. And I had to call the credit card company. And they just asked me a couple questions, and then the flag was removed. It was kind of crazy.
And you were going to the Bahamas. You weren't like in
no, I was doing
Zimbabwe or Syria or something, right?
Well, I went to the Bahamas and did transactions, and then before the trip, I bought something from Europe, and it was shipped to me. But anyway, the point is, it's just a pain in the ass. Anyway, and one time actually I got a check from a company in the Bahamas, and I went to deposit at the bank, and they fingerprinted me, and I had to fill out all these stupid forms and all this kind of crap. And that was, I think, anyway, it's just more and more of this is actually happening. So one of the promises of Bitcoin is it makes that very simple. You just, have the Bitcoin device or whatever, and you press the button, and you can do what I'm speaking of difficulties really easily. However, I'm afraid to do that because Bitcoin moves so much. I mean, we've seen it fall 5% a day or go up crazy over a couple months or crash over, and that's not like I don't consider that a store of value. And I actually think it's difficult to use Bitcoin for money. But you showed me this thing just before we got in there, this glint thing, and here's something that I would feel more comfortable using this as Bitcoin because it's gold and it's not going to move, normally, but so much in any given day, at least not as much as Bitcoin does. So in my mind, the people that are really interested in Bitcoin now, they're more interested in it because it goes up in value, not because they want to do offshore transactions. They want to trade it. They want to get into it. And the thing about trading Bitcoin is that it does move so much. And we're in an environment in which the stock market on any given day barely moves at all. That's one reason there's been a bit of a mania into trading triple ETFs because the SPY doesn't move enough. And even gold stocks, they're not moving much this year. So there's some crazy people trying to do JNUG and dust and all that kind of mess. Very difficult to do because these triple ETFs, they decay over time. So with gold's been going sideways, and both, for the most part, it's up a little bit for the year, but sideways is the overall trend so far. But JNUG, the triple ETF for the longs, and dust, the triple ETF for the shorts, are both falling in value, causing those trading them to rot away their wealth. Bitcoin doesn't have the decay factors and problems. I'm just trying to make a point, I'll get to it, that Bitcoin is becoming a very attractive trading vehicle for people, much like the internet stocks were before, because it moves.
Well, what's interesting about, you're talking about the gold stocks, is if you go look at them essentially since the summer, you're about in this trading range between about 22, 23 on the GDX and 24, 25. For gold stocks, that is an almost unprecedented non-volatile kind of flat range. Yeah, gold stocks tend to be really, really volatile, move up, move down a lot. If you go look at them in 2016, the GDX bottomed at around 12 and went to 31, so it went up 150%, and then it went to 18, so then it went down to 40%, and then it rallied back to 25, which is another 40% rally from that 18 level in early 2017. So usually you have this wild swings in the gold stocks, but now you're kind of in this very, very tight range. What I find interesting, you're in this tight range going into the end of the year when gold stocks tend to bottom and have a seasonal kind of rally, and we're going to be switching the whole thing with Fed chairmans, and I think the new chairman is going to be much more dovish, and I think that'll be very, very positive for the price of gold. So, and then again, that translates back to what you're saying about Bitcoin is, there's non-volatility going on in gold and the gold stocks, combined with the stock market not having a lot of volatility, combined with these cryptocurrencies and Bitcoin having huge runs with a lot of volatility, has kind of bred this kind of day trading mentality into Bitcoin. What's kind of interesting about it too, what I think is personally, is a lot of these trading websites that I follow, which are guys who are just purely stock traders, they're talking about cryptocurrencies every day, right? And why are they talking about that? They're talking about it because it's the only thing moving. It's the only thing that day traders are really playing. And it's, like other than maybe a few FANG stocks or high volatility tech stocks, I think that is what has attracted people into it. And the last thing is talking about this Glint coin. The thing about it is, if I have an account and a debit card attached to it, okay, Bitcoin might be good for speculating. But I agree with you. There's companies like Zappo. They're out of it's the biggest one. They're out of Hong Kong that do these Bitcoin debit cards. Well, do you really want something that's linked to an asset that has gone from 1,000 to 8,000, go back down to 4,000? And you got money in an account you're taking out of a debit card? No, I want something that's much more kind of stable. And if you look at gold, gold's basically been in this range between 1,100 and about 1,400 in the last 3-4 years. So if I'm just using something as a debit card, I'd rather have kind of that cash card linked to something that doesn't have the huge amount of volatility.
Well, let me show you a little chart. It's kind of funny. In October, I was doing a search for potential breakout stocks. And I've got a little pattern I like called I was looking for stocks that double and then consolidate for potential breakout. And I discovered this stock in October called Riot. And it's a company, it's actually, it was a biotech company, and it just changed its name to Riot Blockchain, and because the biotech sector was dead, and it just surged on that news in September that changed its name, and it said it wanted to do blockchain stuff. Now it doesn't make any money, not a penny of revenue, but it consolidated, and as you can see, I actually mentioned it multiple times to put it on their watch list to trade it for a breakout. I don't put out the trading alerts on my free email list, but the thing surged and took off last week and went crazy. It's up 9% today, but it makes absolutely no money. So at all, the company. So that's something, again, it reminds me of the .com stocks, because they would surge and go up when they linked themselves to a concept and connected to Bitcoin. It's pretty funny.
Yeah, well, that's kind of like the two sectors I'm seeing that in right now are these marijuana stocks and the blockchain, like Bitcoin type things. You're right. A lot of biotech companies or mining companies in the last few years have turned themselves into marijuana stocks, and same thing, they kind of spike when that happens, and then that's happened. So that to me tells me we're in the midst of a mania. But in terms of how long this is going to last, is it going to be like the Nikkei in 1989? Does it just go up to the end of the year? NASDAQ in 2000, we go up into March, a 2987 style blow off, where these things continue to move higher into, say, the summer. I don't know what is going to be the case in all of that. No one knows that, right? And the thing is, you get these people, these, excuse my language, bullshitters like Martin Armstrong acting like they, like whatever. no one knew that this was going to happen. Even the biggest bulls I know. Here's a perfect example, Mike. This year, virtually every analyst on Wall Street was negative, thinking that the S&P was going to be flat or slightly down. Maybe they didn't like Trump, whatever it is. But now everyone is positive. Everyone is calling for 2,900, 3,000, saying tax reform, the buybacks coming in from companies bringing back money, in that tax holiday, all that sort of thing. So, but when this market tanked in 2009, 2010, no one, even the biggest bulls, thought that 8 years later we would be here, right? So now what's happened is, and Kyle Bass is one of the best analysis of the average person's kind of psyche, in that it tends to last about 2 years. So whatever happened in the last year or 2 years in the market, people think it's going to continue forever. So what's happened now is essentially, because the market hasn't had a real pullback since about February of 2016, we're almost 2 years, we're only a few months from 2 years from that, people just think it's going to keep going up with no pullback, which is the opposite of March 2009, when people thought it would just, continue to go down forever. And it had gone down for almost 2 years at that time.
Yeah, it's quite remarkable. And, no one is worried about the stock market dropping and so forth. And it's hard. As you said, there's no way. The way I look at the market using my indicators, I like to look at the internals of the stock market, the percentage of stocks above or below the 200-day moving average, so forth, to spot a top. And it really takes, using that methodology, I can really only look 90 days ahead for a potential turning point. And I don't see one right now, over the next 90 days. That doesn't mean the market can't dip or drop. But as far as like a ultimate bear market rollover, I don't see that. And that's just in a 90-day period. So I don't have a way to predict if it's going to top out, in July or September or whatever. So all I know is the next 90 days, the current conditions are likely to continue and so forth. But at some point, that's going to change. And we've got to be on guard, and not just fall asleep. That's what those people really are doing. They've fallen asleep, and they're not going to look anymore until, they feel like they don't have to.
So what's interesting, just to go back to the gold stocks, I think what's happening right now is you have this big move off the bottom in 2016, right? And then you have this decline into the end of 2016, and then this almost year-long super tight consolidation, especially with gold stocks. Really, really tight range.
Oh, it's a coiled spring if there's never ever been one.
Yeah. And if we go look at the gold stocks, this is the GDX. Let me go show you the HUI, because that will go back that whole way. I don't think I've seen a range like that since probably the 2001 bottom, almost, where you have this move off the bottom here in 2001, and then you have this tight range here, and then they kind of broke out. And even in 2006, 2007, even though they topped a year later before the crash, you can see there was this breakout that lasted for a while after that. So I think, personally, you don't get these kind of tight ranges after a move higher in a bear market, right? I think if you go look at the chart and just go look at the way it's trading, this looks like the 2004, 2005, or the 2002, 2003, or the 2001 kind of consolidation before the next move higher. And again, like I said, we're sort of in this range now where the market is going to move a lot. The market could potentially move a lot higher after this kind of seasonal basing kind of period. And with Powell looking like he's going to be even more dovish than Yellen, I think this kind of has the setup kind of going there. And let me show you one more interesting thing. I have to get the XAU for this, because this is the only indicator only gold stock index that traded back then. So this is 86 to 87. And what's interesting is, notice that from 84 to 86, the gold stocks actually went down while the market rallied in 85, 86. But there was this bottom in 86, followed by this first move higher, and then this huge blow off into 87. So let's say we do get one of these classic kind of moves into the summer, fall. that is what could be setting up for them. Maybe the gold stocks just kind of surge with the market for 8 to 9 months, next year, and then they kind of crash with the market into the fall. I don't know if that's going to happen, by the way, but I'm just saying that is one potential possibility, especially the way the gold stocks kind of traded lower with the market for a number of years, but now are well off their lows and maybe getting ready for a second move higher.
Well, something worth noting about gold is yesterday, Merkel really had a bad day, and that was bullish for the dollar, bearish for the euro. And gold Merkel's lost her coalition, for people who don't know. But the important thing is gold fell about $17 on Monday, and the gold stocks really didn't drop at all. And if gold was in a bearish environment, or we're about to have a gold crash like some people are still predicting, the gold stocks would have been pummeled, crushed yesterday on a $17 gold drop. But that didn't happen. So that tells me that, we're not in a gold bear market type situation. Therefore, as you stated, this is more like a consolidation as part of a bull market. Secondly, people don't realize yet, I think, what Jerome Powell is going to bring to the Fed. I thought, just hearing the various vague press reports, when Trump was going to pick him, that they were saying, well, he's moderate, or I actually heard Bill Gross say he's a Janet Yellen clone. He's not going to make many changes and stuff like that. Continuity was the theme. Well, I look a little bit at his background, and he's got a different background than any other Fed chairman we've ever seen. He's not an economist. He doesn't come out of working either like for Goldman Sachs or JP Morgan either, but he's not an economist. Almost all the others have been. But what he is he had a degree in political science and then became a lobbyist. And for 2-3 years, he was lobbying to raise the debt ceiling or get rid of it. So he's someone very comfortable with deficits, growing deficits, and easy money policies. I wouldn't be surprised if we don't see a more dovish Fed policy emerge once he starts speaking as the Fed chairman, which would be bullish for gold, and stock market bulls will like it too. I'm sure. So we're really going to see an easy money Fed.
Yeah, and if you look at like the dollar index, for example, you're just talking about this. All we've really done is, we went back to the kind of lows of 2015, 2016, and just bounced off the lows and worked off the oversold conditions. So the question is, do we move lower? And another thing too with this, you talk about Merkel in Europe, the big election next year is going to be the Italian election, right? The 3 of the 4 major parties in Italy are anti-Europe. Berlusconi's kind of made a comeback there. And by the way, Berlusconi's now anti-Europe. He's kind of switched, probably knowing that politically that can really benefit him, right? So I look at all this, and even if the euro goes down, if you remember in 2011 when there were all these problems in Greece and the Europe debt crisis, in 2012, the dollar, for example, in 2011, 2012 actually rallied, and the euro started coming off its highs, but gold held up because people were going into gold as a safe haven, basically seeing it as a way to protect yourself, from the euro crisis and stuff. And as of late 2012, which is, by the way, also when the Greek stock market bottomed, so when they had this maximum fear in Europe, gold was still 1,700 an ounce. So I think that even if the euro were to fall on these political fears, you would actually see a scenario where gold could potentially move could move higher, because you get fears into that. And if you just look at the chart here, forget what's going on in the world, you can see that from 2014, we've essentially been building 2013, 2014, this fantastic, like roughly 4 to 5 year base on gold, between, 1,100 and about 1,300 to 1,400 an ounce.
Yeah, exactly. And no, I'm actually very excited. I mean, acting like I did this video, really, but I'm really am bullish on gold. I think it's really got the potential to break out and go crazy. And we got a Fed rate hike in December, but the Fed fund futures only are projecting like a chance of one in June, and after that, that's probably going to be the last one. I know this morning Goldman Sachs put out a note claiming that the economy is about to take off and they're going to raise 4 times next year. But there's absolutely no evidence of that in the financial markets. The interest rate spreads and yields are getting closer together. If the Goldman Sachs predictions are true, the opposite would be happening. I think that's just Goldman propaganda. I don't pay any attention to it.
Again, you can look at the 10-year yield I have right here. We have come off the lows of 2016, but for the most part, we're still, where we were in 2013, 2014. And I would just think that, and remember, this whole period that I have up here on the 10-year bond, rates were at 0 until, the last, 18 months or so. So really the long-term bond yields aren't backing up in yield, even with them raising rates, which means a flattening yield curve. And I think one thing they don't want is an inverted yield curve. So if they raise rates one more time and the short end is at 1.25, they're not going to, I don't think they're going to raise rates to 2 or 2.5% if, say, the 10-year bond is still yielding 2.3.
And I think Trump would yell at him, and for that, rightly so, really. We're stuck. We're in a really bad situation created by all this quantitative easing, the zombie economy, and whatnot. They're trapped. The stock market valuations are so high. It's really weird. I mean, if they raise too high, the bubble bursts, and it's just I don't know what's going to happen. So.
Yeah, well, I think that's kind of and the thing is too is Trump's in a difficult situation, whether you like him or hate him or whatever, in that he wants his stock market bubble to keep going into the next election so he can get reelected. But the problem is he already inherited last year a 7-year bull market. Now it's an 8-year bull market. So it would essentially have to be the longest bull market ever for this to keep going up into 2020.
I know we've been talking for a little while, so if you got any last thoughts, I don't want to keep you all day. Go ahead, and this will wrap up.
Oh, no. My thoughts are just that I do think that gold is looking like this tightening kind of consolidation going over. Like, me and you have been bearish off and on in the stock market the last few years. I've given up on that in the short term. Like I said, it could be a Japan situation where it just goes up into the end of the year. It could be a NASDAQ 2000 situation where it goes up into the first quarter, or it could continue to go up into next summer. The problem you're going to have now is with the repatriation of money probably happening, a lot of that money is going to be used for stock buybacks and increasing dividends, which will probably put a buffer under the stock market for 3 to 6 to 9 months. So that's kind of the wary cause there. And by the way, another thing that we haven't really even talked about, we're talking about gold and resources and other things. Mike and I have been doing private placements. We've been doing gold private placements. We got a copper company right now that's doing a 10-cent financing. Stock should it's got a big resource. The stock should trade north of that when it begins trading in a few months. I got a marijuana stock. Canada is legalizing marijuana next year. It's doing a private placement. So essentially the strategy I'm doing is very simple. I'm buying these private placements in pre-IPO financings and then using put options as a hedge in case there is a big shakeout in the markets. And you hate to say that anything is foolproof, but I don't see how this kind of philosophy can lose, because essentially what will happen is either you're going to make money in one of the private placements. And, I've talked about setting up this Bitcoin newsletter. So we're going to do ICOs and some of the IPOs in the Bitcoin or in the cryptocurrency market. So you're doing that, plus you're hedging it with, say, between 2 and 5% of your assets and put options. I think it does become either you're going to make money in one of these deals or you're going to make money in the put options if the market really rolls over.
Yeah, that makes a lot of sense. Well, once you end up developing that, we'll certainly do videos and talk about it. Well, thanks for talking with me and everyone else. If they want more information from you, go to addictedtoprofits.net, and we'll talk to them again soon.
Yeah, thanks for having me, Mike.